Yo, everybody, it's the People's Money Mentor, and today we're going to talk about the tax brackets as they are in 2024 and will probably be in 2025. So, pretty much trying to give everybody a breakdown of it so you can have a better understanding of how your taxes work every year, whether it's for an income of $50,000 or an income of $300,000+, whether you're filing jointly, head of household, single, kind of give you the idea of what you're looking at. So pretty much after 2017, that was when the TCJA, or the Tax Cut and Jobs Act, started. And that pretty much redefined what we consider as the current tax brackets. Now, don't get too confused by the tax brackets because it's really simple. It's what you would consider as a progressive tax system. And as the video goes on, all the numbers and the percentages, I'm going to put them either at the top right or at the top left to kind of give you an idea of what the brackets look like for if you're single, if you're married, filing jointly, etc. So pretty much what we're looking at for the tax brackets are the new updated brackets since 2017 is 10%, 12%, 22%, 24%, 32%, 35%, and 37%. That's a whole mouthful. 7 different brackets is what you're looking at. What does that mean for you as someone who's being taxed by the IRS? It simply means that at every single tax bracket, that's what you're taxed on for that amount of income. So let's say, for example, you're earning $11,925. That's the max for 2025 that you can be taxed at for 10%. Now, as you go past that amount of $11,295, the amount above that and below $48,475 is what you're taxed on at 12%. And don't worry about that. I'm going to give you an example later on as we start talking some more about it. That way you can better understand it with the numbers, right? So pretty much what this has done too is this has changed, how you're taxed as far as your standard deductions and your itemized deductions. Those have changed as well in the Tax Cut and Jobs Acts. So we're going to touch on that later on too in some future videos. But let's just jump into a quick example, right? So let's say, for instance, you're a married couple earning over $300,000 a year. What does that look like for you in, let's say, 2025, right? So 2025, what that's going to look like for you is when you earn up to $23,850, all the money from that. So you take away $23,850 from your $300,000 that you earned, and that's what you're taxed at for 10%. Now, 10% of that is going to be $2,385. So that's the first one you're going to see up here now. The second tax bracket for you, according to the TCJA, is the 12% tax bracket for you and your spouse filing. Now, starting from $23,851 all the way to $96,950, that is the amount of $73,099. You're going to be taxed on that $73,099 or $73,099 at 12%. So what does that look like? Well, we're going to add the $2,385 that you just got taxed on at 10%, and we're going to add $8,771.88. And that's $8,771.88 is the 12% of your second tax bracket, which for you was $73,099. Now, moving on, we're still not at the $300,000 yet. So moving on to your third tax bracket now, which is at 22%. Now we're going to look at that third tax bracket. For you as a filing couple, that tax bracket is any income between $96,951 all the way up to $206,700. When you subtract those two numbers, you get $109,749. That amount is what you're taxed at 22%. And so that amount is going to be $24,144.78. So far, the amount you've been taxed, 10%, you're taxed to $2,385. 12%, you are taxed a total of $8,771.88. And at 22%, you're taxed at $24,144.78. That's how much so far you're taxed at now. So now we're going to go to your final bracket as a person earned or as a couple earning $300,000, right? That final tax bracket for you is going to be the 24% tax bracket. That means any amount of money above $206,701 and below $394,600 is going to be taxed at 24%. For you, what that would look like is your maxed amount as a couple, which is $300,000 minus the $206,701. That gives you a total of $93,299. At 24%, that amount has a taxable income of $22,391.76, giving you a grand total for $57,693.42. So pretty much what we can see here, to understand the progressive tax system, is the higher your income goes, the higher the rate is on that upper portion. So you're not being taxed a total of 24% or 25% or 35%, or anything like that. Every time you go up in income, that new bracket is where you're getting taxed more. So how do we reduce these taxes? There are going to be many ways on reducing it, but you can see now that the key part to reducing your taxes is to try and get into a lower income, taxable income each time, right? So as your income goes up, see if you can bring that income back down. So in the next video I'm going to give you some pointers on what I think and what I use, because again, in my videos, I always talk about things that I've done or that I'm currently doing to reduce the taxable income. So stick around, again, follow, like, subscribe, tap the bell just to know when I put out that other video. And again too, if you have any suggestions, maybe if I made any mistakes in this video, give me those mistakes in the comments. Let me know what I messed up on so I can correct myself, because I'm not perfect. Again, this is not advice. I'm not an accountant, so go to your accountant.